Monday, January 30th, 2017, Monaco 64, home of alternative economics and contrarian views. So I'd like to give a quick update on the markets and a look at some of the charts in treasuries or bonds, gold and silver. I think we might be at an important juncture, short-term to medium-term juncture in those markets. So it's quarter to 8 a.m. London time, so quarter to 3 a.m. So still very early Eastern Standard Time in the US. Markets, of course, are already trading in the futures. Right now, gold is 1191.50, so basically unchanged from the close at 6 p.m. New York on Friday. We have gotten up to 1196. So we are near the lows right now. The Dow is down about 50 points at 20,041. We got down to 20,006. So we were down almost, about 90 points earlier. So that 20,000 point level has held for now. S&P is 2287, down 6. So both stock indices down about 1/4%. Silver unchanged at 1715. Even though silver did very well on Friday, surprised me, by trading up through 17, while gold basically was slightly higher to flattish, but gold did hold well the 1180 level. What else here? Currencies. The pound is basically unchanged, up 0.1% at 125.60. Dollar is weaker against the yen, is down about 40 pips or 1/3% at 114.70, and euro is slightly higher at 107.08, down up about 10 pips or 0.1%. So I said I wanted to talk about the technical picture in bonds, specifically longer term treasuries, gold and silver. The 10-year yield this morning is basically unchanged at 248. But I've looked at a chart of something called TLT, and you can check that, Google TLT, and that's an ETF on long-term treasuries. It's an iShares 20-plus year treasury bond ETF. And you can see I've got the chart here of the price of this ETF, and I'm touching up on the price this time instead of the yield, just to give you an idea where we are. You can see since the summer of 2016, when we made a new high there, that the market's been coming down, and we bottom. It seems to, the price bottomed towards the end of the year there, just before the beginning of 2017, end of 2016, and it's been going up a little bit. We have come down in the last week or so, but as you can see there, that there's a trend line coming from all the way from 2011, and it looks like we might have held that trend line, and we might bounce back up, or we might not. So we need to keep an eye on that trend line, and basically that will correspond to the 2.64 or 2.6 to 2.64 yield, I would say, in the 10-year. So personally, I think we might see a little rebound. I have spoken in the past about how I think the bull market in 35-year bull market in bonds might be over. And I've said that, it won't go, prices won't go down in a straight line. You will see corrections in a bear market, and this could be it. We could trade up to that, let's say 130 level in this ETF, and then come back down, or I could be wrong. This bull market could still have another leg higher and make a new all-time high. You never know. But right now, short term to medium term, it looks like we could go a little higher, but I would watch closely on the downside as well. So that's treasuries or long-term treasuries. Now to gold. Gold, I guess, didn't do as well as silver on Friday, but it it did bounce off the lows. You can see here in this chart, it's a daily chart. The low was just around 1180, and I've done a little bit of Fibonacci retracement analysis here from the low in 2016, December 15th, right around the Fed time there, when the Fed raised rates, the low around 1122, 1124. You can see that taking the recent high of 1220, the 38.2 retracement was 1183.45. We went through that a little bit, but it looks like we've held that. As long as I think we can hold above that area, 1183, and break back above 1200, gold might be resuming, its bull trend that started in the middle of December 2016. So that's gold. Let's have a look at silver. Silver, I've put up a weekly chart because I think it's interesting to have a look at the weekly, especially with what it did on Friday and how actually we closed up in the week, as you can see. And I think right now, if we get back above 1730, 1750, we could see silver also resume its upward trend. The longer term chart, as you can see, doesn't look very damaged. We had that spike low last week, but it managed to close above the previous week's close. So it hasn't been damaged that much, the weekly chart. So silver's still looking fairly good. As for the stock market, I think there's two levels people are going to be looking at. In the Dow, 20,000, of course. That's a key level we need to stay above. And in the S&P, it's 2282, I think. That's the previous all-time high. So that's it for now. If you enjoyed this video, give me a thumbs up, share it far and wide, subscribe to my channel if you haven't yet. If you'd like to donate to my channel, there's some links below in the description. And I'll talk to you later. Take care. Bye.